So guys, this video we're going to talk a minute about financing transactions without using banks and what that might look like for you on your investment transactions. So along the way, you find this video helpful, take a minute and like the video. Don't forget to subscribe to our YouTube channel. Make any comments below. We'll do our best to get to those and answer them for you as well. So as investors, we're trying to buy houses. One of the first things, you got to have two things. You got to have the product, the property to buy, and you need the ability to buy it, which could take on many different scenarios, but primarily it's some form of cash or a creative solution of some type. So you find this house. The question becomes, do I pay cash for the home if you have all cash? Most investors don't have that kind of money to pay all cash for a property. But you might have cash to use that for a second lien type mortgage. So could you find a private lender? Sure. Maybe that private lender is willing to finance for you 100% of your purchase price and or repairs. Or maybe that private lender is willing to provide the purchase price and you provide the repairs. Got it. Now, if you're going to do that and buy this into a corporate entity, put a second lien mortgage on the property from yourself personally to the LLC for that second lien amount, just to give yourself some added security and protection along the way. Can you use asset-based lending or hard money lending? Absolutely. Now that's usually going to be shorter term financing, whereas private financing may be anywhere from 6 months to 5 years or so. But private lending doesn't usually go out too much longer in that because they want their money back a little bit more quickly. Again, in the hard money world, private and cash, if you're buying a home that needs repairs or renovations, of course, these are the mechanisms that you'll be able to utilize that will help take care of those issues for you. But can you buy a home with creative finance? Absolutely. So if there is an existing mortgage on the property, you can buy that home subject to the existing debt or by utilizing a wraparound mortgage and negotiate your transaction from there as well. Now, either of those could require some cash out of pocket to the seller, be it a wraparound or the subject to transaction. You can use your own cash for that purpose. You can use private capital. Most likely you won't be using hard money because hard money is simply not going to provide you a second lien position on most real estate deals that are out there. Now, if the seller owns that property debt-free, are you able to ask that seller finance it to you? Absolutely again. And if they wanted some cash to entice them to finance the lion's share of that, could you use your own cash or, again, some form of private capital? And I think the answer is sure. Now, when you're deciding on how to acquire that home, you've got to know what your back-end strategy is going to be. Is it a fix and flip strategy? It's going to be short term, 6 months to a year, let's say. Is it going to be a long-term rental or an owner finance where you need to find a mechanism to refinance that property? Well, if that's the case, you need to be asking your private lenders for longer term capital. And if you're going to do an owner finance, you got to make darn certain that you fully disclose that you have a short-term first lien mortgage on the property, because what you don't want is to have a 5-year payoff on your first lien and give your seller a 30-year note. That may not work too well. That's about disclosure and proper structuring in that scenario. On the flip side, if you're going to rent the home out, Airbnb it, whatever it might be, and you've got a short-term 5-year private loan on it, if you do things the right way, you may be able to ask your lender to extend their loan. Maybe you can pay down their principal a little bit. That will allow you to extend the loan as well. It's all about negotiating, but at the same token, you better be ready to refinance that house now going to a bank or sell it in some format and reap your rewards at that point in time, because they don't necessarily have to renew and extend that loan for you. Now, if you are buying a higher loan-to-value property, this is so often where we're seeing the subject to transactions come into play, where we're seeing a lot of transactions that are 100% of value, 95, 90% of value, not 65 or 70 or 75%, that lenders just aren't going to come close to paying cash for that money, and it's not wise to pay full value for some of these properties out there. But being able to buy those homes of high LTV using the subject to mechanisms, even having to come out of pocket some capital that may even put you in the transaction at 105 or 110% of value may very well work. So just taking a moment to look at that, if you buy a home subject to the existing debt that has a high loan to value, let's say 95%, but you need money to bring that loan current, other things, a little bit of cleanup, renovation of the property possibly, that pushes you over 100 cents, why would you do that? Because normally we can sell these homes with owner financing for 110 cents on the dollar. We get a down payment from our buyer that allows us to reimburse that money we paid out of pocket or our private lender along the way. And that pushes that back down again. So we wind up paying off that private loan very quickly and now getting into a very attractive positive cash flow position. But you've got to make sure if you're going to do that, you understand the game, how to play it well, and how to navigate your costs and expenses by paying that debt down quickly so you don't put your lender into harm's way. So there's all types of ways of buying homes creatively, again, without using a bank. Cash, private money, hard money, subject to the existing debt, using a wraparound mortgage, direct seller financing. And it's having all of these at your fingertips that you can utilize when you're talking to your seller and you understand their situation. Those deals that have high equity where you're able to come in and pay cash in some format, awesome. You have various ways of doing those transactions. Other deals that have very low equity, maybe you're limited to utilizing your creative finance subject to wraparound scenarios. But there's always a way to skin that cat out there that helps us wind up buying these properties. So guys, I hope you found this video helpful. If you did, take a minute and subscribe to our YouTube channel. Don't forget to like the video, make any comments below, and we'll see you guys next time.